So in my mind, I've been thinking of making at least one free training video for you guys who continue to support my Instagram, watch the stories, trying to learn how to better your trading. Um, for those of you on Facebook who've supported over the last 8 years, thank you for that. So I make these videos to help you guys out, to let you guys know what's going on, give you updates, give you options. Many of you out there are trading every single day and you don't know where to step. You think it's in you're stepping into a new strategy or a new system or you know giving ridiculous amounts of money, $5,000, $10,000 for whatever promises people can give you is the answer. And the answer is in the building of the skill. So that's what I focus on, whether it's private students or the private group or even on these free videos. We worry about the skill. There's no hype. Things are what they are. So the first thing that I always like to do is I like to talk about the group. This group is a group where I send out what I'm looking to do in the market, how I'm looking to do it, the markups and explanations and all that good stuff. So the idea is we are not only giving people setups and trades for them to take if they wish to take them, but we are also educating them at the same time because we give them screenshots, we give them video updates, we give them multiple pairs. They're seeing the same things over and over, so it's learning via immersion, via repetition, and it's worked beautifully. Over the last couple of weeks, we've given a better price on the group. We've made it a little less expensive to start. The subscriber fee is only $50 a month. The entry fee is a little more than that, but trust me that it's well within almost everyone's budget. We doubled the size of. So we're going to focus on gold in this video, but I just want to be clear that we trade more than that. We trade Euro JPY, we trade GBP JPY, GBP CAD gold. We give out whatever setup is there. We don't. I personally don't believe in anything under 20 pips. I don't believe it's worth my time or your time. We don't just throw out setups just to throw them out. I respect people's money. I respect people's time. I respect people's education above all else. So I would never give out a setup just to give one. But we are very good about giving out setups every day, at least an update, educate, something, giving some sort of value to make you a better trader. So we're going to cover the gold trade and the way that worked over the last maybe week and a half, 2 weeks. I want to show you that we've been on top of gold. GBP 65 pips of profit, 35 pips on GBP JPY. Gold taking the sell. This was back on May 29th. So things started to formulate on May 29th. I gave out the video updates. Took a loss on GBP CAD. It's gonna happen. That's normal. Losing on the market is normal, especially when you're taking smaller wave trends. Every now and then you're gonna see something a little skewed and it's gonna screw you up. Notice the loss is minimal, 20 pips. Let them know we're out of here. GBP JPY 60 pips on the buy. Gold 80 pips on the sell. Okay, so this is where things started to happen. Before that, we had already started seeing the way the market was working. If you go into my Instagram, I've been buying on gold for a while, buying and selling. That's how I trade. I trade the higher frame, but I also work the lower frame of the market. So when this started here, we started buying on that Friday. So if you go back to May, I would say like May 23rd, May 24th on my Instagram, you'll see that I was in a buy with the group, and that thing went about 100 and something pips. We took a continuation for about 60 pips. And then the market got a little choppy and we had to dump the buys, fully TP them, so there's no harm, no foul, and wait for the market to show new structure. What it formed was a channel, right? If you guys follow me, you guys know I love the channels, right? I love trend lines. I love to work the market structure of the market. I keep it very simple. It's not easy, but in my mind, it's simple, and that's what I strive for with my private students, with the people in the group, with anyone, whether private students or group members or both. When I just want people to understand that you just need to get this down to a repetition thing. It's going to take time because you need to learn things to your core. So when we found the channel, basically what I said is we're going to start working this channel. So we worked it from the top with the sell because we are in a bearish market, and then we started to buy. So not only did we take buys going up, we also took the sells coming down, and then looking to go up was the key. So let's look at it. We took GBP JPY 60 pips, and then we move on to gold. Gold, 80 pips on the sell, still holding as we have failed to break the channel once. A continued support at the bottom of this channel, and I will fully TP and turn this into a buy. Meaning we were once selling, now we're going to start buying if this thing does not disrespect that channel, meaning break out the bottom of that channel and support level. So we continued, and then maybe 7:50 a.m. was that update, and then by 11:07 we were buying. Okay, so it started to look like this, and then it turned into this. Okay, now you may ask, why didn't I buy from down here? Because I'm not a fan of guessing. And in that moment, with my bias and the way things were working, it looked like a guess. So let's go to the market and see what that looks like. We got some other stuff here for the people who will keep asking me about the group and what we do. Here's what we do. Gold is now up 100 pips, continuous updates. Jonathan's taking care of other pairs. I'm focusing on my pair, GBP JPY, 130 pips on the sell. Gold is now up 160 pips. Then gold is up 230 pips. Things are moving. Okay, things are moving, so I'm continuously updating. If there's nothing to say, then I don't say anything. But if there's something to say, we say it and we educate. Recap and some education to end the week. This is how I feel people learn trading. Consistency. GCAD, blah blah blah, GBP JPY, blah blah blah, updating, right? But what am I looking for here? I'm looking for a bullish run on GBP JPY. Gold, we were up 370 pips. GBP JPY, we're still in this sell. But what I'm saying for GBP JPY with giving out that bullish understanding is, look, this thing can turn over. Be careful. We can turn over on GBP JPY and go into the all-out buy, right? Because that's going to be important. And we're still going, and then we switch it up. GBP JPY up 35 pips. So not only am I running gold up about 400 pips, now I have taken GBP JPY down, provided all the information, and now we're starting to look up, as you can see. Very clean, high-low, very clean entry. GBP CAD up 30 pips. GBP CAD not moving anywhere, so we're doing what we can do with it. And now GBP JPY up 100 pips, okay? So remember, we were bearish first. We were bearish on GJ, and then we had to turn it over. So I like to keep people informed of what's going on in my mind, what I'm watching for. These things are not happening minute after minute. These things are happening over days, over multiple sessions. And we keep moving forward, all right? So as you can see, entry 1, 90 to 100 pips on the buy. Entry 2, 20 to 30 pips on the buy, right? We're working the market. We're working the market. Gold, all right? So with gold, we had TP'd fully the buys with gold. All right, where's that at? Here, scroll up real quick. Full TP of gold, 430 pips. We've reached retracement levels and daily former highs. So at that point, I couldn't continue to hold the gold buy. I just didn't like the way it reacted off that level. Now, I was going to end up being wrong about how far it was going to go, but let me show you why it didn't even matter. It didn't matter because we kept working it. So I started looking for different moves to get in from. So we took the sell on gold. There was a short-term sell on gold that we tried to take, and then we took that for about 40 pips. And then I told them, look, there was a much bigger sell that followed it up, which we missed out on, right? It's not my responsibility to tell somebody when to get in. I tell them exactly what I'm going to do. And sometimes, if I'm not around, I didn't get in, I'm hoping they got in, okay? That's the beauty of trading. You really don't need anybody else. We built a community so that you can be with other people if you choose that to be what you want. But what we're looking for here is always education and freedom. So I didn't get in on the gold sell. Some people did, right? I wasn't around. There's a lot going on this week for me. So I wasn't around. Some people took that sell. Beautiful. But when I saw the buy setup for gold, we took that as well. All right? So I called out the gold buy setup, 50 pips on the buy, and that thing ended up going much higher than 50 pips, and it is what it is. we move on. All right. Finally, to end this week, GEPJPY 140 pips. Remember this buy down here? This thing is still running. We finally hit targets. 140 pips entry 1, 80 pips entry 2. And I think the most important thing with any of this is the education. The education is what matters to me. It's nice to know that you make people money, that you make people catch pips, that they feel that there is a light at the end of this Forex tunnel for them. But what matters to me really is the freedom and education, because no matter what, that person now has knowledge and they could build upon that knowledge. And for some of them, they could be profitable with that knowledge. And that's what matters to us. So we're going to talk about gold. We're not going to talk about GJ because it was just too simplistic. Gold has some more interesting stuff. We're going to start with why we were even buying. That's the most important thing. So this is an H4 frame. The question is, why are we buying? Why are we buying in this market that was so bearish? We'll go to a daily real quick. If you look at it, since the 2nd of February, this thing's been bearish, right? It's been dropping and dropping and dropping and dropping, creating lower highs as this market continued to fall. And then at some point, this thing just stops. Now, if you notice, I have these blue lines running across my market. These are areas that I deemed important to recognize, important to know when I'm near those areas, no matter the frame that I'm on. They matter. So I need to be reminded of the fact that we are in those zones. So we're going to keep this very short, very sweet. The market, after creating lower highs for weeks, started creating higher lows, which gives a signal of bullish, lingering power. You need to know that the market is slowly creeping higher and higher. After such a bearish run over the start of the year, you can't forget that before that, this thing's been on a monstrous bullish tear, going on the way up. So finding support was something that this pair could definitely do. Now, we bought ever since it got here. If you go back to my Instagram and you start looking for April, we're in these buys. I've added some extra markups here, and basically what I want to show you is how many times I do the same thing. Trading is not about knowing it all. It's about knowing what you know and doing that really well. I'm a big believer in channels and trend lines and support and resistance, higher and lower frame markings, and understanding that the market moves in multiple waves, not believing that you're in momentum. You know, I've made videos like this before. I talk about it on my Instagram, where the momentum type traders who are always guessing the breakout, they're the ones who get in trouble the most, because false breakouts are a common occurrence in the market. So I'll give you an example. You know, we ran a channel, right, as I showed you before, for this breakout. What's really the lines that we paint isn't what's pushing the market in one way or the other. The lines that we paint, the markups that we do, the key prices, that's just giving us reminders, right? They're just cues for your eye to ensure that you're looking at things the way you're supposed to be looking at them. So this right here, it was done over here. It was also done over here. It was also done over here. Many trades that I take look exactly the same. Now the skill is in seeing it before it happens and while it's happening, so you can actually pull the trigger when it matters. That's why I show you the befores of stuff, the fact that we're working this before it even happens, because any schmo can say, look, if you look here, here, and here, this was doing this, this, and this. And then when it's time for you to do it, you have no idea what the hell's going on. So I like to talk about the market before it happens, which is what most people should do when they're offering you some kind of education. They should tell you, look, I see this, this, and this, okay? What we do in the group is we always provide our outlooks on the market. What are we going to do if this happens? What do we see right now for current market? What do we see right now for the future of the market? It's important to understand that when you're looking at the market, if you're on a lower frame, what applies for today may not apply for tomorrow. And the best example that I can give you is looking at the daily, right? This thing was dropping and dropping, creating lower highs, okay? And finally it started creating higher lows. Higher lows on the bottom, lower highs on the top. So bearish made sense for a long time until it stopped making sense, okay? If I take this market and I do one of these, this thing looks very, very bearish. Okay, if I go like that, just like that on my screen, from here to here, it was very bearish. Nobody knew this thing was going to pop up. You have an idea that you have a double bottom here. You have an idea that you're on support. Maybe the buy makes sense. But I guarantee you many people sold from here while we were buying. Okay? It's also a bias thing. You gotta execute your bias, whether buyer or seller, to the best of your ability. So let's look at the 400 something pip trade that everybody asked me about, and let's look at how I continue to update it and continue to work it. So it starts with a very basic understanding of higher lows being created, which gives bullish pressure. Higher lows are signaling bullish pressure, bullish push, bullish continuation, bullish trend, whatever, impulse, whatever terminology you want to give it, up is what it's signaling. The market is going to go up. Gold is going to go up. How it goes up is also very important, because if we look at gold, it went up 200 pips. It drops 200 pips. This is important. Anyone can look at this market and say, wow, it went up 700 pips. Look at that. If you would have entered from here, if you would have followed this strategy and blah, 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 the things people say to sell you something. The important part is, what would you have done in this market? So one of the things that I tell my private students is, look, if you're going to mark up a chart, don't just look at what applied to you. Look at what would have worked against you. What would have happened if you would have seen the market here? Would you have reacted to the retest of that key price to go up? Would you have reacted at the fact that this thing is creating a high? Would you have waited for the retracement back down to create a double bottom? Are those things that you would have taken into consideration? Would you have waited for something easier to see, like that running ascending trend line to finally pop up? Would you have waited for the breakout of what was once a former high breakout for that bullish push of 150 pips, that bullish run, that bullish trend, that bullish up, that bullish impulse of 150 pips? Would you have understood that the market is still technically bearish, so what goes up can likely come back down? You have to, when you mark up a chart, you have to look at these things in a whole view, not just what makes sense to you and your strategy, but how could it have worked against me? Now notice right now I'm on an H4. I'm on an H4 because that is my favorite frame. Out of all the frames, that's my favorite one. Even though I am very good on an H1 doesn't provide me enough information in my mind. So I like to stay on an H4 to make my day in, day out decisions. My 24-hour decisions are made on an H4. So this market, we took a couple of solid buys for 100, 200 pips, multiple entries. We were on top of this. We ended Friday, that Friday, we ended it with a buy. So it was another channel breakout, right? Or trend line breakout. How you see it could be a little different, but basically that, okay? I understood lower lows. I understood that the market was finding support, creating higher lows, and basically we took the breakout, and there you go, 100 pips, okay? But that Friday, we took the continuation right there. Boom. This is important. Now, this is important. Now, let's figure out, let me take out some of this stuff, keep it nice and clean. We had a micro breakout here, right? Boom. There you go. Now, follow along. The market was very bearish. But if you look at it, it created a high within this price. We broke out of these highs, or you could look at it like a trend line break right there. We broke out. Boom. There's our trade. We're good. Here's our continuation. Boom. We're good. Everything is solid. And then the market retraces all the way back down. Now, if you're a Fibonacci trader, you take your fib from low to high for a micro fib, and you are within 61.8, which is a very common retracement zone. So that's something you could have done. We're not going to really talk about fibs, but I wanted to throw that out there for those of you who have gotten this far in the video. As far as structure, keeping it very simple, creates that lower low, finds the high that was broken on Friday, formulates support above that high that was broken on Friday. It starts small. It doesn't start with a thought of 430 pips. That's not what happened here. What happened here was a combination of structure and news. When news hit, it unleashed what was going to happen inevitably very quickly. That is my opinion. That's how we got 400 and something pips that quick. Now let's look at it, how it was handled. We took the sell first, right? So the first thing that I saw on Friday, remember, we started like that. That's touch 1 on the high. It comes back down to support. That's touch 1 on the low. Touch 2 on the high. Touch 2 on the low. So now we have 2 points on both sides. I saw the channel. I started to see this. I was like, all right, this is starting to formulate. We have to pay attention to the way the market reacts. This is a 4-hour candle. So every candle on your screen is 4 hours of information. We take the sell on the retest. We take the sell because technically in my mind we were still bearish. All right, so we take that sell. There you go, 80 pips. And then 1 4-hour candle, 2 4-hour candle, 3 4-hour candles, and then boom, this thing explodes. Now, if you go back to the beginning of this video, my entry is not down here. I didn't have the stones to enter down here. I didn't have it. It would have been nice, but I didn't have it. I had to wait for the market to formulate. Now, if you notice, I never remove my markups. You know, markups that I find important, they're there for a reason. They're not there because of laziness. They're there because I need the reminder of key price. I remembered that this price was important here for the breakdown, important. Look at the size of these candles when it gets near this price. I'm giving you sauce here. When we make the website, it's going to be on here, right? More in depth and more examples, but it's going to be there. Students, they get this sauce, they get the whole thing. So we make sure that we give as much of what we know as possible, okay? So this little bar right here is reminding me, look, this price is important. So on this third touch, all I needed is one signal. One candle signal to let me know you're out of here, man. This thing is not coming back. And here it is. This engulfing candle basically engulfs all former structure, engulfs previous sessions. I took the entry at the break of this price, so I have to lower it to a lower frame. It's right here, 1, 2, 3 hour candles. My entry is right there. All right, my second entry is right here. So not only did we take this for 400 and something pips, we also took this for about 300 pips. Okay, so it was about a 700 pip trade in total. Now, when I look at this market, you may ask, well, Gustavo, it's nice that you took 400 and something pips and 700 pips. There's people like this in the world, I'll tell you this right now. But what about the rest of it, man? It went another 200 pips. You could have got 600 pips. You could have got 1,000 pips in one run plus everything else. That's like 1,000, a million, bazillion pips. It doesn't matter, man. Something that I tell people all the time is there's going to be another trade. This is a gift from the Forex gods as far as volume and speed in the pips. I did everything possible to let this trade breathe. We break that first key price. It zooms right through it. Target 1 for me was here. So this market just blowing past everything and closing the daily above it right here. The daily close, which is one of my favorite things. When that daily close like that, I'm like, I'm holding. I guarantee you people are selling, but remember, let the candles close. Pay attention to that higher frame. Don't get caught with your panties and your pants down. Make sure that you are following the higher frame. Don't be a sucker. Don't go to that M5, M15, M1 and make your decisions there. That H1 and make your decisions there. That daily is saying we just bullishly destroyed everything previous. Hold. So the market ends up going further and further. As the hours climbed, reacting, going with the trend, we're already in it, so why not hold it? All right? Not falling prey to little H1 dip downs like right here. Look, let's look at the market. What would have worked against us in the moment? Look, 5-6 hours and this market moves 29 pips downwards. People react to stuff like that. Why? Because the market has already moved 200 pips in their direction. So in their mind, they're like, it's bound to correct. Really? Do you know that? Did you make a call to Warren Buffett and he told you it's going to correct? You don't know. In order for you to take a sell in this situation, you need way more confirmation than a couple of measly hour candles. So we keep going and going, and it keeps climbing and climbing. I'm over here with my arms crossed, all happy. Why? Because everyone's making money, people are catching pips, and I'm sitting in the green, baby. So this thing goes and goes and goes and goes. Now we open up a brand new week here. The decision was, Do we see this high over here, this key price, and sell it? Or do we hold? The answer is hold. You could drag your stop loss. You can skim out the trade a little bit if you're feeling uncomfortable. But you hold. You let the market take you out. You don't take yourself out of a profitable situation. You don't jump into a sell just because you go to an hour chart and all of a sudden it looks like it's ready to dip down. No, not enough. Not enough. So I finally TP'd this when we got to that daily high. All right. We got to the daily retracements. I said enough is enough. I didn't like the way the daily closed. So I started to look for the sell. Now we took this sell. We took the sell off the high. It went for about 70 something pips. I took it for about 40 to 50 pips. And then we got +1. Then we had to discontinue the sell. Why? Because if we go back to that 4-hour chart, look at the way the candles look. Let's look at the candles for what they are. All right? Dip down, back up, dip down, back up. The market is bullish. The bearish situation froze right here and never came back. The market is not showing any sign of strength on the way down. I'm not going to sell this again. I just got +1, man. I would need all this to happen all over again. +1 means I took my stop loss and I put it in the profitable margin. I need for the market to push down and show me that it's going to create lower highs. I need that. I need that to sell it in a bullish market. If this is not something you understand, please don't be live. You can't be live if you don't see that this is bullish after 500 pips of uptrend. So we just closed at 430 pips. I give them the quick sell, and I end up being wrong about it. All right? I end up being wrong about the fact that we were selling. Now, no one lost. No harm, no foul. Maybe a little bit of pride if you still have that in this game, which is a mistake, having an ego in this game, because you never know what could happen with the market. I guarantee you no one expected 600 pips or 450 pips in 2 days. No one expected that. So that type of volume. So how did we adjust? The market goes up, tests daily highs, comes back down. I call for the buy. I can put that in here if you want. I'll show you real quick. Go, 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 go. Gold update, 50 pips on the buy. As I said last night, retested the support prices, and I would take the buy, take the ghost trend line. What that means is sometimes I'd like to get a little hey, man, look, I know what I'm doing. I'll draw something before it even happens. If you know how to trade, if you know how to mark up, you know that this isn't even a real trend line. There's no second or third touch here. So I'm basically showing them this is how it'll formulate. That's called knowing the game. That's called skill, okay? So I understood that we were going to get this nice little breakout here, and that would be the price. So this is pretty much where we took the market from. The market right there. All right, there's your buy. All right, here's buy 1 with the breakout. Here's buy 2, the real move. All right, so I've stopped all gold activity. There's nothing in here. Going forward, I'm looking to start to take that sell because we're testing daily highs. I like this close. I like it. And we get another daily close like that, I'm in there like swimwear. We get some 4-hour closes that are structured like this with some channel work, I'm in there like swimwear. You already know. I say that with confidence. If this thing blows right through this, cool. We never got the structure we needed. Because right now, I'm not ready. If we open up, let's say Monday, because right now it is Saturday. We open up with a gap down, then you already know what's going on. Right? We find any kind of bearish structure, that's what we're doing. But we do not guess the highs and the lows. We wait for the market to structure up. When I am super sharp, like GBP, JPY, which we're still in, when I'm super sharp like this, it's because time allowed me to do so. When I'm like this, I'm looking for that breakout. There it is again, man. Trend line, understanding where I'm at, understanding that I'm bullish, retest of key prices. That's why I trust this trade. But when you see me like this on the edge, it's because of the time that it allowed me to get in. The amount of market structure that formulated there to allow me to get in. Knowing where I'm at in this market. Knowing that the market has found support which would allow me to buy it. Knowing that I trust what's happening here and here and here to do this. To test my target. This right here is a nice and easy 150 pips, 140 pips, whatever, depending on your entry. Second entry is about 90 pips. And we're still in there like swimwear. Obviously, we're skimmed down. Obviously, we've taken profits. If you risk 30 pips and you've made 30 pips on a trade, 25 pips on a trade, I recommend you take something out. Percentage gains over anything else. So that's the way gold worked this week. For those of you who kept asking me, like, how the hell did you know it was going to go that many pips? I didn't know. That's the answer. I treat every trade the same. I treat them all with quality. That's something else that I love to teach. You don't diminish the skill or your accuracy. You don't lower yourself to a second or third rate quality trade just so you could catch a couple pips. I treat every trade like it has the possibility of going 100 and something pips. I treat every trade like that. That is the only way in my mind that it makes sense to not only catch the 30, 40, 50 pip trades, 60 pip trades, 70 pip trades, but also the 400 pip trades. Because we take it structure by structure, piece by piece. That is the goal day in and day out. So whether you use trend lines, EMAs, MAs, bands, I don't care what you use, or you're a naked trader like me, all that matters is what do you know and do you keep doing that really well. If every trade is a roller coaster, notice how I showed you multiple situations with the same squat, right? The same thing. The reason is I know that I only have 5, maybe 6 go-to structures that I really understand really well. I use the same tools, Fibonacci's, trend lines, support and resistance. There's some other tricks in there, some other stuff to help you formulate the trade, but honestly, it's experience. All right, what you need is experience. You need somebody to explain this to you so that you can start doing it the right way and let time work its magic. Let consistency work its magic. But if you're out there trading different systems every day, I don't know if that's going to work for you. I can't say yes or no because I'm not you. But from what I've seen, it hasn't worked with the people I've encountered, with the many students that have come my way. What works in my mind is learning the right way to do something, however you get that information, and then doing that over time and letting time work itself out. Letting time give you the experience points. Letting your consistency pay off. All right? So find those resources. If you're looking for resources, private student, slots are open, seats are open. I am actually looking for private students. I'm looking for people who are beginners. I'm talking about don't know anything. And people who know their stuff, they just need a couple of pieces. Prices are different depending on the type of skill level that you have. Also, we have the private group, which is $50 a month, so it's nice and easy on the budget. The entry fee is a little more than that, but not a big deal. Trust me when I tell you that it's for the value, it's there. We're looking to grow this community. We're looking to have one of the best communities out there in the Forex world. I'm also looking for group sessions. If you are somebody who has a buddy or a wife or a husband or a boyfriend or a girlfriend or a cousin or whatever who also wants to learn how to trade, you're both in the same boat, the rates are slightly better, right? The more people who do the sessions, the better for you. I'm looking for a lot of different things. If you're a beginner who doesn't know where to start, contact me. I have resources for you. We might even be able to do a jumpstart session, something quick to get the ball rolling for you. Maybe you can't afford one-on-one sessions over 3 to 6 months. Yes, I work with people for a long time. This is not something that's going to happen in a week. I've worked with people for 8 months. I've worked with people for a year, and trust me, it makes a difference. That's why I do it. So contact me. If you're somebody who's been trading for a long period of time and you quit, come back to the game. Watch these trading videos. Go on my Instagram, follow along, hit me up. I love to talk about trading. It's not a big deal. I'm with you on this. And if you're out there looking for those resources, you know. And that's it. Don't forget to follow me on Instagram at Gustavo Zapz, Gustavo Zapz. Same thing on Facebook. Notifications on YouTube. Subscribe. Happy trading.